Hello nieces, hello nephews, it's your Uncle Charles here, and today we had a pretty nice choppy day in the S&P 500. Not gonna lie, Uncle Charles struggled with this trading today a little bit, and we're gonna talk about that. But first, check out this flow sentiment. I have it filtered for 500k premiums or above, expiration date within 1 month, and look at that. Calls actually is more than puts. 63% in the calls, 37% in the puts. Very, very interesting. Okay, so let's get into this intraday analysis for the S&P 500. Okay, so as I said, Uncle Charles kind of struggled a little bit. Okay, now these arrows represent where I entered my trades. All right, so this is a 5-minute chart. Okay, so I usually trade on the 15-minute chart. I did not do well trading on the 15-minute chart today, but I'm going to use the 5-minute chart to show you what happened. Okay, so this yellow line right here is my 415 level. My first trade of the day was a put. I tried to buy a put over here. Okay, why did I buy a put? Because it was at my 415 resistant level. All right, I was trying to follow my strategy. Okay, now you can't see it on this candle, but it went all the way up and closed around 415.44. I did got stopped out. However, it dropped as low around 414ish. So usually I would cut 50% of my position and take half profit when it drops like $1, 50 cents to $1, just to be safe. So when I bought a put around 415, I took some profit around 414ish, but then it just closed up and violated my stop loss, got stopped out. This one right here, I try to enter another put and try to write it down for the 415 breakdown. I entered another put. Okay, now it dropped as low as 413.7. I was able to scalp some of my positions down to 414. Once again, try to hold the rest of my position though, but got stopped out. All right, not feeling happy at this point because I couldn't catch any clean moves. My third trade, I got into another put. Why did I enter the put? Well, it broke down right here from 415, so I try to enter it as a resistant. Try to use the back test and go strategy, if you will. And well, that one I did not make any profit or got to sell any profit. I just simply got stopped out. All right, and I'm so glad I stopped. I respected my stop loss because look, it could have got a lot worse. All right, now at this point, I'm not too happy. I'm making small money at this point. I'm not catching clean moves, getting stopped out. So I had to take a break for a few hours or a couple hours, and I missed this whole big move. However, I did see an opportunity around the 418.5 level. It was at my resistance, and I said, why not? So I entered a put, wrote it all the way down to 416-ish, made some good money on that. Scalp play, I was out. All right. Then pretty much for the rest of the day, the market just decided to chop up and down between the support and resistance level. Still unable to break that 418.5 level, as you can see, and it came all the way down. I was watching this intraday triangle pattern, broke down this triangle pattern right here, back tested as a resistant, and it was looking like it was gonna head down. So around 415.2ish, I entered another put to play the breakdown. It dropped as low as 414. At this point, I was about up $200 in my option, trade, but then I did not take any profit and got stopped out and didn't get to take any profit. So pretty frustrating day for Uncle Charles. I like to trade those trend days where whether it goes up or goes down, I try to buy the breakouts. I try to use back test and go strategy to catch the second leg. And today, it didn't work too well, But the one thing that I can say that I continue to do good on is respected my stop loss. Okay, it's very hard to do. I know, because we get stubborn and we want the trade to go our way and it doesn't, and there are times, I just wanted the trade to go my way and it didn't. But I respected my stop loss. And as you can see, each time I respected my stop loss, my trade could have gotten a lot worse. So if I did not respect my stop loss, I would have had a much worse day. I ended up the day, slightly green, thankfully, with some scalp plays and this trade up here. But overall, it was a frustrating day, okay? So I want to turn your attention to the weekly chart of the S&P 500. Now, reminder, I am tracking this triangle pattern still, okay? Got the support line all the way back, started back in May of 2020, and we broke down from this long multi-year trend line last week. Okay, so keep in mind the back test and go strategy, which means when we break down a critical level, we want to see it, back test that as a resistant to confirm more downside. So it's possible. Like, think about it. If you're a market maker and you see a lot of people bearish, what's the best way to trick them out? Give us a nice short squeeze to a certain level, and then maybe we'll make the real move down. Okay, now that's just a little forecast. Okay, as long as 415 level holds, I think we can go and back test that, we broke down this week, or last week, which is this triangle pattern all the way up here around 423-ish. Okay, now today the S&P 500 did reject from the 418.5 level. No coincidence. All right, that's my 23.6 retracement level that I got from the March 2020 low all the way to the early January high. Okay, so if the S&P 500 does break that 418.5 resistant level, that should put 420 then 423-ish in play, back test of this breakdown level from this triangle pattern. Okay, but if the S&P 500, the SPY continues to reject from 418.5 and then actually loses 415, I'll be bearish. I will put 410 in play. And then I think for 410, I did have some support around 47, 48, but I think we could possibly break down that, give us a lower low because it is trending, right? If it is trending, and possibly go down around 402, 403, and maybe even fill this gap that's from April of last year. That's around 400. Okay, we'll see what happens. Just remember those levels. Okay, above 418.5 is bullish. That puts 420 then 423 in play, which is, if you see on the weekly chart, is no more than just a back test, a simple back test of this breakdown level. So if you're bullish, you can be, maybe if we break some resistance level, be short term bullish. But to be like more medium to longer term bullish, I want to see this triangle pattern get recaptured. So the SPY will have to close multiple times above 423. Okay, but unless that happens, I'm still short term, or medium term bearish. All right, we could get some more upside to back test and trick some more bears out, because the market makers, even if this is a correction, not quite a bear market yet, the market makers are still not going to make this easy for us. All right, even if it is trending down, they're gonna look to trick us out as much as they can. Okay, so just keep that in mind. And the VIX here lost a critical support level, right? My 61.8 retracement level around 30.2. We lost that. So for the VIX to be bullish, it needs to recapture that level to put 33.4, then 37.5 in play. Okay, as long as it's below 30.2, I'm bearish on it. A bearish VIX is a bullish SPY. Okay, watch the 28 support level, then 25.75. That's my next support level. Then below that is 23. Okay, here's triple Q. Got it on a 15-minute chart for some reason. Now, triple Q still managed to hold that 317 level. Okay, as you can see, yesterday we recaptured 317. Today we treated 317 as a support and managed to hold. So it's looking like if this is a short squeeze, it's look like it's going to continue up to 322.5, maybe 325. Okay, for me to be bearish on the triple Q again, it has to lose 317 to put downside targets in play, and we definitely got more room to the downside, but we want to get that confirmation and lose 317. As long as above 317, we can possibly clear this 319 resistant level at the 5 DMA, then put 322.5, then 325 in play. All right, here is the Dow Jones, also recaptured a critical level yesterday at 329.64, treated that same level as a support and managed to hold. Now testing that 5-day moving average at 332.8. Okay, so Dow Jones needs to clear that to put 335 in play, then 338.8, then possibly 340, then 342.6. Okay, below 329.64, I'll be very bearish. I would love to short that all the way down to 325.5, then possibly 322.7. Okay, IWM managed to recapture a critical level today at the 187.89 level. That puts 190.4 in play, and if that's clear, that's pretty bullish. Puts 193 to 197.2 in play. Okay, if we lose 187.89 in play, that's a false breakout of that level, and then 185.4, then 182 is back in play. And look at Apple, managed to recapture 156.5 yesterday, treated that level as a support, and it's closing right at the 200-day moving average. Okay, around 159.5ish. Okay, so it needs to get above that level to officially clear the 200-day moving average, put in 161.5, then 165 in play, all right? Below the 200-day moving average, below 159.5, keeps 156.5 in play. And if we lose that, very bearish. You can see new lows probably down to 152, 150, and even 147.7. And here's Tesla, okay? So yesterday it recaptured at 872 level, showed some follow through today, bouncing off the 5 DMA at 906.7, no, excuse me, 888.3, and it managed to close just a little above the 200-day moving average at 906.79. All right, it did get rejected around the 925 50% retracement resistant level, so we need to clear that to put the 50-day moving average at 937 in play. Then a big test up here at 998. That's my 38.2 retracement level. For me to be bearish, it has to lose the 5-day moving average around 888.3, and then to test the 872 level. And if we lose that, big drop incoming. All right, a big drop incoming, possibly down to 796 or 797 support zone. All right, guys. So that's what I have for you guys today. You know, Uncle Charters is not a perfect trader. I'm not 100%. I try to be as real as I can be. Okay, a lot of people, especially fake gurus, they try to make winning look good, you know, and winning is good. You know, you get Lamborghinis and all that stuff. But, you know, when we lose a trade, it makes us feel like crap, like we feel less than. And let me tell you, it's okay to lose sometimes as long as we continue to learn from it. And if you respect your stop loss, then you're a good loser. All right, Uncle Charters rather be known to be a good loser than to be a good winner. Okay, because that's what it takes. To not be afraid to lose. All right. Otherwise, I would have never started this YouTube channel. I would have never got into trading. I wouldn't even do anything in life. All right. So just remember, family is important, and Uncle Charters loves you. Peace.